we are heading into the last leg of the financial year as well. And as they usually say, from a tax standpoint as well, this is a great opportunity for you to correct problems in your portfolio. If you need to rebalance, for example, and if, for example, hypothetically, you've got an overweight on small caps, which you shouldn't have, and if there is loss that you're seeing in that portfolio, you can just book that out and you can set that off against future profit. So this is a great opportunity for you to consider doing that. But I want to ask you within this, and I know that you're a proponent of passive also as a strategy. So out of all of this, where would the passive strategies come into play? And is there room for a multi-asset fund? Because there are people who've taken that commodity allocation and they've said they don't want to take that decision themselves. They want to ask the fund manager to do it. And so they've done it through that route. So where does the multi-asset fit in this portfolio?
The first part, Alex, on the passive side, passives predominantly will form the large cap portion of your portfolio. And the large cap bucket is where I would place my passives. The second placement of passives could be in the international bucket, because there again, I believe that it's very difficult to track so many markets globally. So it's better to have a basket of ETFs or an index-based route, right? And the other portion could be purely active. So look, I think it's fantastic to have a multi-asset product in your portfolio if you really don't want to haggle too much between your commodities allocation, your fixed income allocation, your international allocation, so on and so forth, because these are smaller allocations and many a times we get confused as to what to increase and what to decrease in our portfolio. So leaving it to the choice of a dependent fund manager who is professionally qualified and doing this day in and day out, I think it's a fantastic choice. So yes, for investors who don't want to be active enough to take those bold calls, it's good to be lazy and have a multi-asset allocation in the portfolio. So you can combine your commodities, international, some portion of REIT InvIT, even fixed income by a large extent through a single multi-asset window. And I honestly think genuinely that's a great product in any kind of a portfolio, unless you are savvy enough or unless you have advisors who are like really confident to be dealing across all market caps and across all sectoral themes independently. I think otherwise multi-asset is a good choice.
You know, I was speaking to somebody just yesterday and that person was saying that in this kind of scenario, having a higher commodity exposure is not a bad deal. But the advocation was for gold and not for silver. Do you agree or concur?
Oh, absolutely, Alex. In fact, I have a very bold blog which I rolled out around 10-15 days back, saying that we are a bit bearish on silver relatively, and we are structurally bullish on gold. Right. So yes, I continue to believe that for multiple reasons, gold is a revolt against the system. It's a revolt against the US hegemony, against the dollar as a concept of a singular petrodollar currency of the world. It's a revolt against a lot of geopolitical events which are happening, right? And central bank demand is much more steady, much more stable. The supply of gold isn't so abundant. It's not easily replenishable. And for 5,000 years of human history, gold has withstood all kinds of pressures and still stands tall as a currency and as a store of wealth. Right. So I'm structurally very bullish given the way the global setup is. So gold, yes, it's a bullish call relatively.